And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman, where we speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, be sure to hit the like button below. And if you've not done so, please subscribe to both the podcast and the YouTube channel. Today, we're talking everything fintech. It's my honor to bring on the show Harry Clynch, who is a financial journalist based in London. He's a features editor at Disruption Banking and writes about financial markets and international affairs for publications such as The Spectator, Al Monitor, Africa Report, African Business, and more. Harry, welcome to the show.
Pleasure. Thanks for having me.
My pleasure. So let's jump right in, right? Because you're sort of a global expert in fintech.
That's a bit flattering, but I'll try my best to live up to that.
Just go with it. We're the only two people here. Anyway, nobody's watching. We'll call you the global expert. First, before we get in, tell us, what is fintech?
Well, I mean, it sounds obvious, but I mean, basic idea is it's merging finance and technology, hence the name. And it's all about using new technologies, artificial intelligence, data analytics, all sorts of other things, into improving financial services for consumers. And I suppose the idea kind of came out of the financial crisis in 2008 and the following decade, really, where more and more people began to realize that actually the big banks weren't necessarily the best players, and that things could be improved for people. So it's all about kind of chipping away at their dominance, trying to introduce more competition into the market, and basically improving conditions for consumers.
Right. So people in Israel might be familiar. There's a lot of fintech. This is one of sort of the hubs. For example, there was a company here that took on the insurance industry, a company called Lemonade, right? So you might understand, people who are sort of still skeptical, they don't know what it is. It's a company which basically, correct me if I'm wrong, but went after the old time insurance industry with technology, right?
Yeah.
And tried to sort of change the industry in one fell swoop. So that's what we're talking about, right?
Yeah, absolutely. And I mean, we've seen kind of many such examples of that thing where, a lot of the time, the power of big banks isn't necessarily because they're the best or offering the best services. It's more just because they've been around for centuries. They have a massive market share, and therefore their position can seem very entrenched. But fintechs, such as the one you just mentioned, have done an excellent job in kind of going after that and shaking up and disrupting the market.
Okay, I want to throw in a disclaimer. If we mention any companies which are publicly traded, I'm certainly not, for all you out there from the SEC and FINRA who are listening, we're not recommending anything at all, nothing at all. Do your own research and make your own financial decisions. We're just talking and throwing out some examples, that's all. Got to get that in. So fintech has had quite the roller coaster ride, right? It was like red hot a couple of years ago, and then when the whole sort of the technological bubble burst in 2022, funding sort of dried up, and a lot of the hot companies came way crashing back to earth. Can you speak a little bit about that, and then as a result of that, sort of where we are right now in the world of fintech?
Yeah, so I mean, it's been an interesting journey, to say the least. I mean, 2021 particularly was a huge year for fintech. I think globally, VC funding and fintech companies reached, I think, over $80 billion in that year alone. So clearly a huge amount of investment going in. I suppose that pretty largely came from the pandemic, and with more and more people moving online for work and just daily life. Kind of digital solutions were seen to, for obvious reasons, were seen to have a lot more value. But as that's kind of, as we kind of move past the pandemic, and also with global macro conditions, higher interest rates, high inflation, etc., it just hasn't made as much sense for VC firms and investors generally to kind of go into fintech. So as you said, that bubble kind of burst this year. We've seen lots of, both in big tech and in fintech, we've seen lots of layoffs and valuations going sharply down. And I think that probably just reflects just a more cautious attitude amongst investors. With conditions the way they are, there's less appetite to go into highly leveraged fintech businesses, which many of which aren't even making a profit, at an early stage.
Right.
I had a conversation with somebody who looks after the capital markets portfolio for a family office in Dubai, and even they, who obviously have huge amounts of cash to deploy, just generally taking a more defensive position. I think quote unquote boring companies are kind of back in fashion. Ones with robust balance sheets. More recession-proof sectors like healthcare are more attractive. I think fintech's time may well come again, but it's certainly a difficult time at the moment.
Well, it's, I'm dating myself, but there are a lot of similarities to when the tech market blew up in 2000. And, it was about revenues there and eyeballs and unique visitors and all this kind of stuff. That was big then, right? And a lot of those companies went under, but, right, out of the rubble came the biggest tech companies that we have in the world today, right? They survived and they're huge, right? So where do you sort of see that? I'm sure there are going to be companies, again, like there's, fintech companies like Square or whatever, right, that are going to probably really change the way that we bank, that we shop. Where do you sort of see the sweet spot right now in the industry?
Yeah, I think you're certainly right to draw parallels with the dot-com bubble, for example. And I think what always happens, or what usually happens with these kind of things, is investors and consumers generally kind of get overexcited, start deploying capital into every single thing that seems to resemble a fintech. And I mean, we've seen a lot of fintechs just, it basically just got a little bit silly with the amount of hiring that was going on, the salaries that are being paid. As I said, anything that kind of resembled a fintech was suddenly getting checks for $100 million or whatever. And also, I think people, and perhaps I was guilty of this at the time, I think people kind of overestimated the extent to which the pandemic would change the world. I mean, there was a stage where people, of course, we have become a lot more of a digital world since the pandemic. But I mean, I think there was a stage when people really thought that lockdown conditions, in terms of working from home, doing everything from the internet and your computer, would just become the norm. And actually, what we've seen as economies have emerged from lockdowns, we've seen that actually people quite like being outside and being out and about. And like, for example, with e-commerce, people actually, the numbers of people going to shops, physical shops, have actually gone back to kind of pre-pandemic levels. So e-commerce has taken a big hit.
That's fascinating. Yeah, that's really interesting.
So I think, but that's obviously, as you said, that's not to say that fintech doesn't still have value and that some companies will emerge from all this stronger. A prime example just recently is Revolut, which, for those who don't know, is a kind of, it's like a fintech bank basically, which processes transfers and also allows for foreign exchange transactions to happen at very low rates, mostly free actually for most people. That's actually just posted its first profit and is now actually expanding its headcount and offices in London. So I think certainly the stronger companies will come out of this, unscathed and will continue to grow. But a lot of the companies which were lucky enough to get big checks in 2020 and 2021 for dubious reasons might find themselves in trouble.
That's interesting. And there's no question though that they've had influence on sort of the old economy leaders in whatever field they are, right? If you want to speak about banking, there's no question that the big multinationals and even the JP Morgans of the world and the Bank of Americas of the world are, have changed their business. I mean, they can buy up these companies also, but they've changed their business model because there is that competition, right?
Yeah, no, absolutely. I mean, as I kind of said at the start, fintech kind of arose as a challenge to the big banks and as an idea which was trying to chip away their dominance. But I think as kind of the industry's progressed and we're quite a number of years into this kind of fintech era now, I think big banks are actually starting to adopt a lot of fintech practices, use a lot of the technology themselves. I mean, Goldman Sachs, for example, actually not particularly successfully has had a whole fintech unit or subdivision set up, which actually got in a bit of trouble with shareholders because it's not making very much money. Well, they're actually losing quite a bit of money.
But by 2025, they promise it will be profitable.
I'm sure. But I think what's actually an interesting trend now seems to be that, I mean, fintech was always described as a kind of competition between these new kind of revolutionary companies and the old traditional banks. But I think we've actually seen a kind of merging of the two sectors where the banks are kind of more adaptive and are kind of absorbing a lot of the ideas and technology of fintech. I mean, they have to, otherwise they're going to just be taken over by them. So I think there's always going to be a place for big banks. There'll always be a place for fintechs to kind of shake things up. But yeah, I think that's the kind of trend we're seeing at the moment.
It's really interesting. Where do you see, is it in transactions? Is it like in foreign currency, like you said? Is it in tradition? Is it in banking, digital banking? Where's like the real sort of the few sweet spots that are really, really sort of still humming, still able to raise money, even in this environment?
Well, I think foreign exchange is a big one. So, as anybody who's got friends or family abroad or has conducted foreign exchange transfers will know, I mean, some of the fees charged by the big banks are just ridiculous. I mean, even for things like sterling euro, which is very liquid market, very close geographically. You're looking at maybe 6-7% sometimes, which is
wow.
just outrageous. And then for those people transferring further afield, States, Africa, Middle East, it's even more. So then you have players like Revolut come in who offer it for free, and that was part of their model. When they weren't really making much money in their early years, they kind of did that just to try and a lot of fintechs do this just to kind of try and chip away at the bank's market share. So with a situation like that, I mean, there's clearly a massive incentive for consumers to move over to fintech, and they have done. And that, it's a long-term strategy which requires a lot of funding to keep you in business along the way. But as I said a minute ago, Revolut just posted its first profit, so that is evidence that strategy can work in certain situations.
And how are they making money? Like where, if they're doing free transfers or whatever, where are they actually making their money? On the spreads and the currency?
Well, so they didn't for many years, but I mean, I'm not entirely up to date with their kind of policies, but I think it's the basic idea is that they allow most normal consumers who are conducting transactions below a certain amount, that's all free, and then there's additional packages you can buy if you transfer money regularly or if you're business. So I mean, for kind of most normal people who are just maybe going on holiday once or twice a year, it's ideal because all their FX is free. But even when it comes to businesses and stuff, it's still a lot cheaper than the big banks. Even taking into account the fees they do charge. So I mean, Revolut, as I said, I mentioned a few times, but it's because they're such a good example of how fintech can become successful. But we've seen plenty of other companies as well who are solving specific problems. And I think, again, going back to the kind of issue of the hype of 2021, we saw a lot of fintechs emerge, which, when you actually looked at what they were doing, it wasn't entirely clear where the value was coming from or what they were doing differently. But any fintech that can actually solve a certain problem or demonstrably improve a service, I think is well set to do well in the future.
It's really interesting because this, I don't want to harp on Revolut, but it's a really good example because I just individually, get paid in America and I live in Israel, and most American banks don't know how to do an international wire transfer, or they won't even do an international because of all kinds of new compliance issues. They just won't even do it. So and outside of the big hubs like New York and maybe Miami and Los Angeles, you're not going to find a banker who would even know how to do an international transfer at all. They'd be clueless. Right. So you can see how they can just slide right in there and get a need and fill the need. Another issue is I know that there are companies like Square or whatever who have sort of changed retail, right? Because they are real, sort of bringing everything together, technology and finance through AI, right? Through the hottest thing today, right? It's probably going to also blow up, but artificial intelligence. Can you speak about how sort of AI is part of the whole sort of fintech package and how it's influencing things?
Yeah, I mean, as I kind of mentioned at the start of my very basic definition of fintech, I mean, the second part is about tech and is about using innovative new technologies to improve services. AI obviously there's a lot of hype that surrounds it. I mean, we've seen this, not to open this can of worms, but we've seen this with ChatGPT, for example, recently, which has got a massive, ridiculous valuation. We'll see if that, yeah, if that plays out well or not. But in terms of fintech and banking, AI has actually proved quite useful in terms of mainly actually compliance and kind of back office operations. When it comes to things like money laundering or KYC checks, using AI technology can help banks and fintechs, sift through thousands or tens of thousands, even millions, bits of data to build a picture about a client or about a transaction, and raise any red flags that come up basically in real time. So you can have, rather than having thousands of compliance professionals sitting at a desk trying to work out what's going on, you have a bit of technology, albeit quite expensive and sophisticated bit of technology, that can do all that for you in real time very accurately. There has been a few controversies around it. For example, when it comes to credit, so some banks and a few fintechs have offered this service have used AI to determine a certain client's risk profile. However, there's been a few lawsuits around this as well. There's been claims that the AI is kind of embedded with certain biases and prejudices that kind of disproportionately affect, for example, ethnic minorities or single mothers or people in kind of lower economic backgrounds. So there's a kind of question mark over whether AI kind of just replicates kind of human prejudices or whether it can be a kind of independent, fair, 100% fair kind of technology. So it's an interesting one. It's certainly got immense potential and immense power, but it's about harnessing it in the right directions, I suppose.
It's sort of similar to like the Google algorithm, right? Which knows everything about you and targets everything to you. And you think that it's embedded, there's a chip in your mind, right? When you go and do a search and like, how do they know that? But it's the same type of thing that the financial services companies are starting to use with the AI, right? They know everything about your patterns and they can offer you loans and the whole deal, right?
Yeah, absolutely. I mean, I forget the name of it. I should have come prepared with it. But there is an AI based company which can actually, if you go on your phone and open up your banking app, it can actually kind of see the way you normally kind of press the buttons and the way your fingers normally go across the screen. And then if that doesn't happen, it kind of starts to think that maybe this is somebody else trying to access your account. So I mean, that kind of thing is actually kind of quite scary in terms of how advanced it is. But I suppose, as I say, if it's used in the right way and if those kind of moral questions are kind of resolved, I think it has immense potential for sure.
Okay. And to sort of wind up, what would this interview be if we didn't touch at least digital currencies and the world of Bitcoin, which is stabilized. Sort of, where do you think Bitcoin and all the others in that whole world, where are we heading with that?
Yeah, so I mean, it's a similar story to fintech in many ways. I mean, Bitcoin hit its peak in 2021, and I think it certainly was part of that overexcited, hype-ish atmosphere that surrounded that era. I mean, another interesting kind of sub point about that as well is the stimulus checks that were given out in the States that gave everybody $1,000, and we had similar kind of, we called them furlough schemes in the UK and other similar things worldwide. There's actually evidence to suggest that was part of the crypto markets, where people had this extra money from the government, didn't really have anything to do with it, and just kind of put it into crypto speculatively. So that was probably part of the hype. And yeah, it came crashing down last year, following a series of collapses of major currencies such as Tether, the stablecoin. And then later in the year, we had collapse of the crypto hedge fund, Three Arrows Capital, and then famously, probably most famously, FTX. So, I mean, again, a bit like what we said with fintech in terms of how certain fintechs will survive and remain stronger. I think a similar thing is at play with crypto, where crypto can survive, but it needs to become something that's actually useful and has a value rather than just being a random kind of speculative asset. And something I'd point to as evidence that this could be the case is actually Africa. So in many countries in Africa, there really isn't much of a financial infrastructure. Millions of people are unbanked. To the extent that people are banked, they are charge extremely high fees for transfers or for kind of normal banking activities. And during the crypto bear market, we've actually seen transactions and trading volumes in Africa increase. And that's because the average African user of crypto tends to be using it actually for practical reasons. They're buying crypto, using it for a reason, such as to transfer it to somebody else who immediately cashes it out. So that means the actual price at which it's traded isn't the most important thing, because they're just cashing it out pretty much straight away. So I think when it's used in that kind of situation, to solve a problem in the market and to fulfill a purpose, I think that certainly has its place and certainly adds value. But crypto will have to find new ways and to appeal to people in other parts of the world and to actually find its actual role in markets, really, I think.
Interesting. That's really, I mean, that's fascinating, because you're saying that, if somebody can figure out a practical way, like they're doing in Africa, so that it's usable, not just a speculative tool, right? But if people can actually, trade in it, not speculative trade, but goods and services, right? Then it has a lot, then there is an actual practical application for it, and it'll be around.
Yeah, absolutely. I suppose, as I said, the challenge is to find its other uses. I mean, there has been some movements towards the use of smart contracts in things like the law, because with smart contracts, I mean, I'm not an expert on the technical stuff, but with smart contracts, you can program it such that funds are released if certain conditions are met, and that could be useful with business negotiations, with complex purchases of maybe real estate, for example. So if we move towards that kind of situation, I think it could certainly be valuable. But I mean, for as long as I'm a bit old-fashioned in terms of, I think our payment system in places like Israel or the UK or America, people moan about it and it's not perfect, but I think fiat currency in a day-to-day sense is actually perfectly fine for most people. The average person doesn't see any need to use Bitcoin to buy a coffee or do their shopping. But if we can find other ways where digital assets can add real value, like in those kind of situations, then I think it does certainly have a role to play.
That's great. Harry, how can people get in touch with you?
Yeah, well, I'm on Twitter, at Clynch Harry. You can see my writing on disruptionbanking.com. Or just Google my name and see what other articles come up. But yeah, happy to answer any questions, or happy to hear from anybody who's got any comments about the interview.
That's great. I appreciate it. Thanks so much for coming on the show. This was really interesting.
Yeah, no, brilliant. Thanks for having me, and hope to speak again soon.
You've been tuning into the Aaron Katzman Show. We speak about your life, your money, and your investments. If you like this content, please hit the like button below. And if you've not yet done so, please subscribe to both the podcast and the YouTube channel. Thanks so much for tuning in, and we'll speak to you soon.